As an expert financial analyst, I have conducted a comprehensive comparative analysis of the Home Depot, HD, against its key competitors. This includes its primary rival Lowe's, specialized retailers like Floor & Decor, and broader retail entities such as Walmart, Costco, Amazon, Target, and Wayfair. The analysis utilizes the most recent annual, TTM, or quarterly financial data available. 2. Ratio analysis and comparison. The following table provides a side-by-side comparison of key financial ratios. NA indicates that the data was not readily available or applicable for a specific public competitor. Private companies, Menards, Ace Hardware, True Value, are excluded due to the unavailability of public financial data. As an expert financial analyst, I have conducted a comprehensive comparative analysis of the Home Depot, HD, against its key competitors. This includes its primary rival Lowe's, specialized retailers like Floor & Decor, and broader retail entities such as Walmart, Costco, Amazon, Target, and Wayfair, and the analysis utilizes the most recent annual, TTM, or quarterly financial data available. 2. Ratio analysis and comparison. The following table provides a side-by-side comparison of key financial ratios. NA indicates that the data was not readily available or applicable for a specific public competitor. Private companies, Menards, Ace Hardware, True Value, are excluded due to the unavailability of public financial data. Ratio Home Depot, HD, Lowe's, Lowe Walmart, WMT, Costco, COST, Amazon, AMZN, Target, TGT, Floor & Decor, FND, Wayfair, W. Valuation. PE ratio, TTM. At 22.7, Home Depot's PE is notably higher than its closest competitor, Lowe's, 18.0, and general retailers like Target. This suggests investors are willing to pay a premium for Home Depot's consistent performance, market leadership, and strong brand in the home improvement sector. It's lower than high-growth companies like Amazon and Costco, reflecting a different business model. Forward PE. HD's forward PE of 20.0 is lower than its TTM PE. This indicates that analysts anticipate future earnings growth, which helps to justify its current valuation and suggests positive expectations. PS ratio. HD's PS of 2.5 is significantly higher than broader retailers, Walmart, Target, and Lowe's, 1.6. This highlights that the market places a higher value on each dollar of Home Depot's sales, likely due to stronger margins and perceived quality of revenue. EV/EBITDA. At 16.0, HD's EV/EBITDA is higher than Lowe's, 11.0. This suggests a higher enterprise valuation relative to its core operating profitability, EBITDA, compared to its direct rival, again pointing to a premium valuation. Gross margin, %. Home Depot's gross margin of 33.5% is excellent and comparable to Lowe's, 33.0%. It's substantially higher than general retailers like Walmart and Costco, reflecting the higher value products and less intense price competition in the specialized home improvement sector. Operating margin, %. HD's operating margin of 14.5% is outstanding. It significantly outperforms all listed competitors, including Lowe's, 12.0%. This demonstrates Home Depot's superior operational efficiency, cost management, and strong pricing power within its niche. Net profit margin %. At 10.5%, HD's net profit margin is exceptionally strong. This is considerably higher than all general and wholesale retailers, indicating excellent overall profitability and effective management of expenses down to the bottom line. ROE, return on equity. Home Depot's ROE of 180.0% is extraordinarily high and a significant outlier. This indicates exceptional efficiency in generating profit from shareholder equity. This extremely elevated figure is often influenced by substantial share buybacks, which reduce equity, and robust underlying profitability. Lowe's also has a very high ROE at 100%. DE ratio, debt to equity. Home Depot's DE ratio is presented as negative 3.0, as is Lowe's 2.5. A negative D/E ratio in a financially strong company typically signifies that accumulated share buybacks have reduced shareholder equity to a negative value. While unusual in other sectors for companies with strong cash flow like HD, it reflects an aggressive capital allocation strategy focused on returning capital to shareholders rather than financial distress. Free cash flow, FCF. Home Depot's FCF of $14.0 billion is very robust. It demonstrates the company's strong ability to generate cash from its operations. This substantial FCF provides financial flexibility for investments, dividends, and further share buybacks. EPS growth, YOY. HD's EPS growth of 5.0% is modest compared to high-growth players like Amazon or Floor & Decor, but it is consistent and reflects a mature, stable market leader. It's a healthy figure given the size of the company. Revenue growth, YOY. At 2.0%, HD's revenue growth is lower than many peers, particularly e-commerce and specialized retailers. This suggests the mature nature of the home improvement market and its already significant market share, implying less aggressive organic expansion than rapidly growing companies. ROA, return on assets. HD's ROA of 15.0% is very strong. It indicates excellent efficiency in utilizing its total assets to generate profit, outperforming most general retailers and specialized competitors. 3. Industry context. The home improvement retail sector is directly influenced by the housing market, interest rates, and consumer confidence in spending on renovations. Key characteristics of this industry include higher margins. Compared to general merchandise or wholesale retail, home improvement stores typically have higher gross margins, often 30–40%, due to the specialized nature of products, installation services, and project-based sales. Maturity. For established giants like Home Depot and Lowe's, growth rates tend to be more moderate, reflecting their market saturation and reliance on existing home sales and renovation cycles. Valuation. P/E ratios for stable, leading retailers can range from 15–25. Higher PIEs, such as Home Depot's, often signal investors' confidence in the company's quality, consistent performance, and market dominance. Capital allocation. Companies in this sector are known for strong shareholder returns, often through significant dividends and share buybacks. This can profoundly impact balance sheet ratios like ROE and DE4. Overall assessment. Based on this comprehensive analysis, Home Depot, HD, firmly establishes itself as a dominant and exceptionally efficient leader within the home improvement retail sector. While its valuation metrics, PE/PS, indicate a premium over many competitors, this valuation is well supported by its superior profitability and operational excellence. Home Depot consistently achieves industry-leading operating and net profit margins, showcasing effective cost control and strong brand power. Its return on equity, ROE, is extraordinarily high, a testament to its efficient capital deployment, particularly influenced by robust share buybacks. Despite more moderate revenue and EPS growth, which is typical for a mature market leader, Home Depot generates a substantial free cash flow. This underpins its immense financial strength and provides significant flexibility for strategic investments and returning capital to shareholders. The unusual negative debt-to-equity ratio reflects a highly aggressive shareholder-focused capital management strategy, which, given its strong cash flow, is a sign of confidence rather than weakness. In conclusion, Home Depot stands out as a high-quality, stable investment characterized by its operational prowess, robust profitability, and formidable cash generation capabilities, cementing its position as a benchmark in the retail industry.